problem is the incentive structure is a lot of people either they aim for clicks and therefore sensationalism, either really good or really bad sells, or people get politically intertwined to try to be objective as possible, regardless of what's going on. When you're running 6 or 7% of GDP structural deficits without a recession, that is a type of stimulus. And I think that's the environment that we're in. I sometimes describe myself as like a bearish bull.
Yeah.
On Bitcoin, I try to always have conservative bullish targets,
Sure.
which is that, it's like I'm always like, I think it's going to outperform things, but I don't think it's going to the moon anytime soon. But my guess would be Bitcoin is probably going to take over for a while. Over the next 6-12 months, I put my vote for Bitcoin.
In today's video, Lyn Alden explains the structural forces driving markets from fiscal dominance and persistent deficits to cracks in labour and real estate. She shares why both bulls and bears can find their data, how she views Bitcoin as a cautious bullish play, and why the next 6 to 12 months could favour BTC over gold. Lyn also breaks down Bitcoin treasuries, why MicroStrategy and Metaplanet stand out, and what risks she's watching in AI spending and housing. And don't forget, join our Telegram group for exclusive market insights. Links in the description below.
The problem is the incentive structure is a lot of people either they aim for clicks and therefore sensationalism, either really good or really bad sells, or people get politically intertwined. So if who they don't like is running things, everything's bad. If who they like is it's all good, and they kind of just fluctuate without kind of that. At least I try to be objective as possible, regardless of what's going on. I think kind of what we're in now is fiscal dominance still. So the same drum I've been beating for a while, but it's kind of fiscal dominance with a slightly slowing underneath aspect to it, because we have other headwinds like tariffs, a little bit of cracks in the labor market, nothing particularly strong. And so it's kind of one of those things where data, you can always find data to support something if you want to find the things that are kind of running hot. There's plenty of data points out there to find them. If you want to find the things that are looking really bad, I mean, commercial real estate's slowly been having issues, and obviously the residential real estate market's been, at least volume-wise, pretty much slammed shut for a while. Like I said, little cracks in the labor market, a lot of indicators still not looking great. So any camp can kind of find what they're looking for. But I think basically the summary is the private sector itself is in a somewhat sluggish state right now. But when you're running 6 or 7% of GDP structural deficits without a recession, that is a type of stimulus. And I think that's the environment that we're in. And that's a lot of that is baked into the cake rather than something that it was kind of an active decision this year or last year. It's kind of more structural. It's based on entitlements. It's partially based on interest expense, partially defense, and all this stuff that's intertwined there. And a lot of that is pretty embedded and keeping things somewhat elevated in kind of that K-shaped economy or two-speed economy, whatever terminology people use.
People like Ray Dalio, all the biggest investors, they're coming out, they're saying, 10, 15% of your portfolio in gold now. Why do you think Bitcoin has sort of underperformed? I mean, it's a digital gold. It solves for some of the defects in the physical version. So why do people, even though I know we're up 100% since last year, by the way, but people are feeling kind of bearish about the whole situation?
I think it's because it's reality versus expectations. Part of why I've not been that disappointed is because I've been more in I sometimes describe myself as like a bearish bull.
Yeah.
On Bitcoin, I try to always have conservative bullish targets, which is that, it's like I'm always like, I think it's going to outperform things, but I don't think it's going to the moon anytime soon. And we can talk about why that is, but part of the reason I like to hold both is because they don't always perform well at the same time. Sometimes Bitcoin gets ahead of itself. Sometimes gold gets ahead of itself.
Right now it's gold.
Yeah, gold's the larger asset by a factor of about 10. A lot of the biggest pools of capital still understand it better than Bitcoin. Bitcoin's viewed more as like a tech play, something that is to do homework on to figure out. Whereas gold has, been around for a while. I sometimes I get a little concerned around Bitcoin getting ahead of its skis. Other times I get a little concerned around gold getting ahead of its skis. Right now, I mean, gold, just by more metrics, is kind of sentiment overbought. Even though I still think the long-term case for it is good. But I mean, over the next 6-12 months, I put my vote for Bitcoin. I think that kind of that rotation, and I could be wrong in this. Maybe we look back 12 months from now and maybe gold still outperformed again. But my guess would be Bitcoin is probably going to take over for a while. I think partially we had to see some of the MNAVs, like overvalued MNAVs of treasury companies deflate to some extent. Once we saw like altcoin treasury companies coming to market, basically at that point, you just kind of have to expect there's going to be a washout to kind of get the kind of tourists out of the system, both in Bitcoin and around Bitcoin. But then that allows for a platform to rebuild from. And now that we see the Fed getting a little bit more dovish, we've seen some of that kind of already get washed out. I think Bitcoin's in a better place for the next 6 to 12 months going forward would be my base case.
Well, I wanted to get your outlook on the Bitcoin treasuries because to your point, a lot of the MNAVs have compressed. People are feeling a little bit bearish. Some of them have really gotten decimated recently. I know that was largely due to some lockups that came up and then obviously people sold. But how are you feeling about the Bitcoin treasuries and how should people evaluate them? Because for so many people that I hear from, it's like, well, MSTR is really the proven one. And especially with the new credit instruments that they've put out, they have a difficult time figuring out how to value the other treasury companies.
Yeah, and I think it's a new industry, so it makes sense. Many of them do have elements that are speculative. The only one that I've ever owned is MicroStrategy. I would own Metaplanet in certain valuations. So I've been watching that one now that it's come down. I think that one's very well managed. I think those are kind of the two cream of the crop that are out there. I think what makes a good one is that you generally want to be the liquidity leader in your market. So in the US, that's MicroStrategy. In Japan, that's Metaplanet. There are other opportunities for other big capital markets as well. And I think the market's made it clear that if one is unprofitable, they tend to put a pretty big discount on that just because they view it as a liability to the longer term Bitcoin strategy. In addition, if you're the third, fourth, fifth, sixth most liquid one at what you're doing, it's just challenging. Now, that's where they can add differentiation. If one has cash flows, they can kind of market that and say we're a hybrid entity. You know, we have this other business that's not Bitcoin, and so you can kind of put the two together and they can balance out each other's risk. So they have to kind of explore what's going to work for the market. But I do think it's healthy that a lot of this was washed out, just because whenever something starts to look like free money, that's when more entities are going to come in. That's when you're going to get, like I said, there were like altcoin treasury companies coming to market. It kind of needed a reset. I still think the model makes sense, which is, and there's a couple of different models here. One is the pure play. I think that one, it really helps to be a leader in your market, kind of one of the top two or so. But then there's a long tail of just any company, if they want, if you're selling, whatever the case may be, to have Bitcoin on your balance sheet and make some sense of that. So I think that's still a long-term strategy, and I think that we're in a healthier spot now that some of this has been kind of the froth has been reduced.
So over the next year, what would you say you're feeling the most bullish about, and then what gives you a little bit more concern?
I think Bitcoin's in a good space for the next 12 months. I think we've seen a decent amount of washout, so just unlevered self-custodial Bitcoin is, I think, in a great space right now. Some of the better treasury companies that are either cash flow neutral or positive and their MNAVs have come down a lot. I think that's been somewhat de-risked, especially if they're the ones that also are pretty low leverage. I think those are in decent shape. Gold I like longer term, but the value investor in me is a little bit, it came up pretty high pretty fast.
Yeah.
I started warning about that back in April, and it did this pretty long consolidation. It recently just broke out of it. So I got a little bit more kind of bullish again, but it's still just a little frothy. We'll see.
Okay.
I've been, emerging markets are one of the areas that, I've actually kind of liked, or at least select emerging markets. It was kind of off people's radar. But it's something that, I've been pretty bullish on, and I still kind of continue to be probably for the next 12 months or so. I still think there's kind of room in the cycle for that. But I do think that probably unlevered Bitcoin is in a pretty good space right now.
Okay. And what gives you a little bit of concern? What are you watching most closely where, we had the economic data worsening that we talked about at the top, but nothing that's making you think that we're going to slide into something significant like a treasury dysfunction or a huge liquidity crisis. But what gives you a little bit of maybe worry in the market?
Potentially AI CapEx. That's been one of the few kind of really strong areas of the economy for reasons that I'm sure listeners know. But even that can get over its skis temporarily. And because of the sheer scale of it, even that contracting 10% or so, or just going flat for a year, could be pretty big. So I think just the AI flywheel, just taking a breather is something, or at least the potential for it is something I'm watching. I also think that residential real estate, I've been in the camp that it is kind of in a sideways pattern. So there's been the bear camp, which has argued that because of these now structurally higher rates, we talked about earlier, like I don't think mortgage rates are hitting a new low. The bear camp is basically saying that because of that, these inflated prices are going to just crash. My view has generally been that nationwide average, so obviously real estate is a very local market, but nationwide average, not going to be amazing performance in residential real estate, but that because of the fiscal dominant environment, that it's kind of levitate longer than people think, and that you can work that out through time rather than price. So there's two main types of corrections that can happen. Obviously, you can get over your skis and you can come back down in price, or you can get over your skis and you can go sideways, and you can chop along sideways in 3 years, 5 years, 7 years. You could even go sideways to up, but at a slower rate than other asset classes. So it's another way, and that's a kind of a way of correcting over time. And when you look at charts like residential real estate prices compared to wages, and they say, well, this delta got really big, it has to collapse. It's like, well, it could be the prices come down, or it could be the prices go sideways and nominal wages keep going up. And with inflation, I mean, they're not necessarily like actual wage increases, but just with inflation, and they kind of meet in the middle 5 years from now. And that's been more my camp, because if you have a more disinflationary or deflationary bust, that's one thing. The hurdle for that happening under a fiscally dominant environment is just much higher. So for 2-3 years now, I've been in the sideways real estate camp, and that's, we've been in the sideways to up process, or like inflation adjusted has been roughly sideways. I think that's probably going to continue. So it's not when you factor in maintenance, when you factor in insurance, when you factor in if you do buy it on mortgage, the expense of doing so, real estate's not my favorite nationwide average market right now.
Sure.
But that's different than saying that I expect it to just, crash or anything.
That's Lyn Alden's take from fiscal dominance to Bitcoin's next chapter. If you found this breakdown helpful, make sure to hit like, subscribe, and turn on the bell so you don't miss future insights. Drop your thoughts in the comments. Do you think Bitcoin outperforms gold in the next year, or will gold keep leading? And remember to join our Telegram group for exclusive market updates and deeper conversations. Links in the description below. See you in the next video.